All right, so get this. The pound took a major hit after the Fed's latest announcement, and we're going to dive deep into why.
Okay.
We've got a fresh analysis from Pound Sterling Live, aptly titled,
Right.
Pound to Dollar Rate Swoons After Fed Dials Back Rate Cut Ambitions.
Mm-hmm.
So what's the connection between the Fed and the pound's sudden dip? And more importantly, what does it mean for you?
Yeah, it's a fascinating example of how interconnected the global financial system really is.
Right.
What seems like a purely American monetary policy decision can ripple out and impact currencies across the globe.
Okay, so let's start with what the Fed actually did.
Right.
They cut interest rates by 25 basis points. But here's the catch.
Okay.
The markets were expecting a more aggressive move.
Right, and that's why this seemingly small cut sent such a shockwave.
Mm.
Remember back in September when the Fed projected 4 rate cuts for 2025?
Yeah.
Well, now they're only anticipating 2, totaling a 50 basis point reduction.
Oh, wow.
This less accommodative stance, combined with only 1 dissenting vote to keep rates unchanged, really threw people off.
So it's not just the rate cut itself, but the signal it sends about the Fed's thinking, right?
Exactly. The markets are reading this as a sign that the Fed is more concerned about inflation than previously thought.
Okay.
They're essentially saying, we're going to tap the brakes on these rate cuts because we think the economy is strong enough to handle it.
And this tapping the brakes is what economists call a hawkish stance.
Right.
But the interesting thing is the Fed also raised its GDP growth forecasts for 2024 and 2025.
Okay.
They're now projecting 2.1% growth in 2025, up from their previous projection of 2%.
Yeah, it does seem counterintuitive at first glance.
Yeah.
You'd think higher growth projections would make them more inclined to cut rates to keep the momentum going.
Right, especially since they've also revised their inflation expectations upward for 2025 and 2026.
That's the real head scratcher.
Yeah.
They're acknowledging that inflation might stick around above their 2% target for longer,
Right.
yet they're still pulling back on rate cuts.
So what's the logic here? Are they just overly optimistic about their ability to control inflation?
It's a calculated gamble, for sure.
Yep.
They seem to believe that the economy is robust enough to withstand slightly higher inflation without derailing growth. They're betting that they can thread the needle between supporting economic expansion and keeping inflation in check.
But couldn't this backfire? What if inflation proves stickier than they anticipate?
It's definitely a risk,
Yeah,
and one that's making some economists nervous.
right.
They argue that the Fed might be underestimating the persistence of inflation, and that this less accommodative stance could ultimately stifle growth.
So the jury's still out on whether this was the right move.
Exactly. Only time will tell how this plays out.
Yeah.
But one thing is certain.
Yeah.
The markets are taking notice.
Okay.
The dollar is surging as investors flock to U.S. assets attracted by the prospect of higher returns.
Which brings us back to our friend the pound, who's feeling a bit bruised after this whole ordeal.
Yes. The pound-to-dollar exchange rate took a significant hit, dropping to 1.26012 after the Fed's announcement.
Okay.
That's a 0.65% decrease,
Hmm.
which might not sound like much.
But it can make a real difference, especially if you're planning a trip across the pond.
Absolutely. A weaker pound means you'll get fewer dollars for your money, making everything from hotels to souvenirs more expensive.
Ouch. Not ideal for those dreaming of a London getaway. But even if you're not jet-setting anytime soon, this exchange rate shift can still impact you.
Think about anyone sending money overseas or businesses importing goods from the U.S.
Right.
This fluctuation can affect their bottom line.
So it's a reminder that even seemingly distant financial decisions can have a tangible impact on our lives.
Precisely. And this is just the tip of the iceberg.
Oh.
We haven't even touched on the potential global ripple effects of this Fed decision.
Right, because we're not just talking about the dollar and the pound here.
Right.
This has the potential to trigger a chain reaction across the entire global financial system.
And that's where things get really interesting. The U.S. economy is like a giant ship in the global financial sea. When it changes course, other ships have to adjust their sails.
And right now, it feels like the Fed is steering towards less choppy waters, leaving other central banks to navigate their own rough seas.
Right.
So how are they likely to react to this shift?
It puts them in a bit of a bind, really.
Yeah.
They have to balance their own domestic economic conditions with the pressures of a strengthening dollar. If they don't follow the Fed's lead and raise their own rates, they risk their currencies weakening,
Right.
leading to inflation as imports become more expensive.
So it's a delicate balancing act.
Yeah,
They don't want to import inflation, but they also don't want to stifle their own growth by raising rates prematurely.
exactly. It's a game of strategy. watching what the Fed does, assessing their own economies, and
Yeah.
trying to anticipate the ripple effects of their decisions.
And with the global economy already facing headwinds like slowing growth in some major economies,
Right.
this adds another layer of uncertainty.
It certainly doesn't make things easier. The Fed's less accommodative stance could lead to tighter financial conditions globally,
Right.
potentially exacerbating those slowdown concerns.
I'm starting to get a sense of why the pound swooned. It's not just about the direct impact of the dollar strengthening, it's about this broader anxiety rippling through the market.
Precisely. It's a collective holding of breath, waiting to see how this plays out.
Yeah.
But amidst all this uncertainty, it's important to remember that economics isn't a crystal ball.
Right?
We can analyze data, consider different perspectives, and make informed decisions,
Sure.
but we can't predict the future with certainty.
So no guarantees, but we can stay informed and try to anticipate the most likely scenarios.
Right.
And speaking of scenarios, what are some of the factors that could really throw a wrench in the works, even if the Fed's gamble on the U.S. economy pays off?
Well, you always have to factor in geopolitical events,
Right.
trade tensions, political instability.
Yeah.
Those things can have a massive impact on the global economy, regardless of what central banks are doing.
Right. A sudden conflict or a major policy shift could easily derail those optimistic growth projections the Fed is banking on.
Absolutely. And then there are the unpredictable events like natural disasters.
Oh, right.
You can't model for a volcanic eruption disrupting supply chains or a pandemic sweeping the globe.
It's a humbling reminder that even with all our economic models and data analysis, there are forces beyond our control that can completely reshape the landscape.
And that's why staying informed and adaptable is so crucial.
Yeah.
It's not just about understanding interest rates and exchange rates.
Right.
It's about grasping the complexity of the interconnected global system and being prepared for the unexpected.
Okay, so we've got the Fed's surprise move, the dollar's surge, and the potential for global ripple effects.
All right.
It's a lot to process, but let's bring it back down to earth for a moment.
Okay.
What does all this mean for our listeners, the everyday folks trying to make sense of their finances?
That's the key question, isn't it? How do we translate these global economic shifts into personal financial decisions?
Exactly. Because at the end of the day, it's about how this impacts our wallets, our investments, our ability to plan for the future. So we've got this swirling storm of global finance. The Fed's doing its thing, the dollar's flexing, and the rest of the world is trying to keep up. But what does it all mean for us here on the ground?
Well, think of it this way. The Fed's less dovish stance, it's like a signal flare going up.
Mm.
It's telling us that they're more confident in the U.S. economy's ability to handle a little rough weather, even if that means higher interest rates and a stronger dollar.
So for someone listening who's thinking about buying a house or taking out a loan, this might not be the best news.
It's something to be mindful of, certainly.
Yeah.
If the Fed continues on this path, we could see those borrowing costs creep up.
Right.
It might be worth exploring locking in those low rates sooner rather than later, depending on your individual circumstances.
But it's not all doom and gloom. A stronger dollar could also mean some benefits for consumers, right? Like
Yeah.
cheaper imported goods, maybe?
That's one potential upside. If you're buying products made overseas, you might see some price breaks.
Okay.
And if you're planning a trip abroad, your dollar will stretch further.
Okay, so it's a mixed bag, benefits for travelers and import shoppers, but potential headaches for borrowers.
Yeah.
What about investors? How should they be thinking about this?
This is where it gets really interesting. A hawkish Fed can create opportunities in certain sectors.
Okay.
For example, financials tend to perform well in a rising interest rate environment.
Right.
But on the flip side, growth stocks might take a hit as investors shift towards more value-oriented investments.
So diversification is key as always. Don't put all your eggs in one basket and make sure your portfolio is aligned with your risk tolerance and long-term goals.
Exactly, and don't be afraid to seek guidance from a financial advisor if you need help navigating these shifting tides.
Great point. It's easy to get caught up in the headlines and make impulsive decisions.
Yeah.
But having a solid financial plan and seeking expert advice can make all the difference.
Absolutely.
Yeah.
At the end of the day, knowledge is your most powerful asset. The more you understand about how these global financial forces work, the better equipped you'll be to make informed decisions for yourself and your family.
Couldn't have said it better myself. It's been a wild ride unpacking this Fed decision and its ripple effects, but I think we've managed to shed some light on the complexities and what it all means for our listeners.
It's always fascinating to delve into these topics and see how seemingly abstract financial moves can have such tangible impacts on our everyday lives.
And that's what we're all about here on The Deep Dive, connecting the dots and making these complex issues accessible and relevant.
So to everyone listening, stay curious, keep learning, and don't be afraid to ask questions. The world of finance might seem intimidating, but with a little effort, anyone can grasp the basics and make smart choices.
Exactly. And remember, we're here to help you navigate those choppy waters. So until next time, happy investing, happy traveling, and may your financial journey be ever in your favor.